They do not price correctly. Okay. And we could do a whole show, an entire show on how, why, what's the reason, everything else behind correct pricing. And so many guys, and I don't know what it is, Cody. I think about it. I'm like, sometimes it's our own lack of, what's the word? I don't want to say self-confidence. There's just this level of like, well, because we can do it, okay, because we can do a thing, we don't hold it in that high of value. Welcome to Sharpen the Spear podcast, where we help manufacturing executives command the front and win the floor. I'm Richard Walsh, creator of the Sharpened Impact methodology, and I've spent decades helping leaders transform frontline teams, unlock hidden profit, and capture capacity they didn't even know they had. If you want to see where your leadership gaps are costing you and how to fix them, head over to grittolead.com and run the free Sharpened Impact Simulator today. Let's sharpen your edge and get started. And we are back on STS, Sharpen the Spear podcast, with another incredible guest. Cody Daniels is with us today. And Cody, no one knows Cody like Cody. So Cody, give us the backstory, bring us up to speed. We're going to knock out this conversation.
Yeah, sure. Well, thanks for having me, Richard. Excited to be here. Excited for this conversation. Yeah, a little bit about me. I'm a CPA, been in public accounting for 13 years. During that time, developed expertise within the construction and real estate industry. And last year, August 2024, launched my own firm, Builders Tax Group. CPA firm focused on working with, I like to say, anybody that touches a building. So could be on the front end with, real estate developers, could be GCs or any sub that might touch the building, electricians, plumbers, carpenters, HVAC, masons, you name it. And then even on the back end, we have clients that are real estate investors and, more like property maintenance service type businesses. So, landscapers, window washers, even like a pest control company. All of those are, clients that are within our wheelhouse and that we'd be excited to work with.
Oh, that's awesome. That is, and you know what? I'm glad you picked the niche and started this business this way, because I think it's an industry, and we'll call it we can call it the home services industry. You can call it trades and service or whatever you want. You get the idea. You just described it all, but there's a particular need in there because these guys do a thing. They provide a service. They have a trade, right? They'll build something, and those guys are skilled. We were talking about this before we kicked this off, but they can do the thing that they do. But like most of us, okay, we're not accountants. We're not experts in any field of that. We have no interest in doing that, right? But the big thing that we realize usually too late, I did and most people do, is that the sooner you can get those, I'm going to air quote, books in order, okay, the faster you're going to start to keep more of your money, which is a really good upside,
Yeah.
but also understand what your business is actually doing. And this is the key. We're going to talk about this is key performance indicators, right? What's my revenue? What's a real P&L? What is that? There's such a thing. Do I actually have to look at it? Right? All those kind of things that most of us don't do or don't know about because we do the thing.
Yeah, absolutely. I mean, kind of the big joke in our industry is accounting is the language of business. And I mean, it's really true. I mean, if you don't have those books in order, you really can't make good informed decisions for your business. You don't know where you're going. And, you can't do the other important things that, result in you keeping more money in your pocket, right? Like tax planning. I mean, I've worked with clients where they call me up in Q4 and they say, hey, I want to do a tax projection. I'm like, okay, yeah, where's your books at? It's like, well, we're close through March. It's like, okay, you're a landscaper. Like, you didn't do anything for the first 3 months of the year. Like, what did you close? Like, I can't accurately predict what your taxable income is based on March financials. Yeah, it's to your point, it's hugely important. It's often overlooked, but yeah, you got to get that house in order for sure.
Yeah, I think, Cody, the issue is what people don't think about, because we're out doing the thing. Okay, again, we're working, we're wearing a lot of hats. That's usually the situation, especially in the beginning, first 2 years, 5 years, things like that. But the problem is, if we're not looking at the numbers soon, meaning immediately when we begin. Okay, we can't project, we can't forecast. Okay, we, like you say, we don't know where we're at,
Yeah.
right? How can you go purchase something when you don't really even know what you have or what's coming in? What are the payables? What are the receivables? All this stuff, should be literally a couple clicks and you have reports, right? That's, to me, that was fantasy land. Okay. Look at that,
Yeah.
back in the day. So, I always like to reemphasize that let's get into this a little bit on, because people always like, yeah, I get it, but, and then you know what happens. It's just excuse after excuse, right? So let's
Sure.
kind of get into the importance of this, kind of not super deep, but like just so we have a really clean and clear understanding of why we need these, we'll call them numbers.
Yeah.
Okay, let's put these things together.
Well, yeah, I mean, I think you already gave some real great examples of that, Richard. It all boils down to, being able to make informed decisions. Can I go out and buy that next piece of equipment? Can I, pick up a new truck? Can I bring on a new crew member so that I can go out there and focus more on sales and start to build out my team? Without having that information up to date and available, and have good historical financials that you can then turn into forward-looking things such as forecasts and budgets and things like that. I mean, you really can't pull it all together and make those informed decisions. So, yeah, it's one of those things that when you're getting started, you're focused on getting that next dollar of revenue in, and it's easy to push these things off to the side. But I like to think that accounting and tax services are going to pay for themselves in the long run. It's going to be an investment to go out there and hire a CPA. It's not an inexpensive expense at the onset of your business, but it's much easier for us to provide you with good advice, good information when we're involved on the front end of things. It's really hard for us to help you, after after the cure is set, so to speak, right? I'll get clients calling me in January. Well, man, I had a good year. What do I do to minimize my taxes? You should have called me in October, is what you should have done. It's too late now. So yeah, and again, we're gonna pay for ourselves at the end of the day. It's an investment. It's not an expense. You really need to kind of change the mindset around, like, what is this service provider here? It's an investment.
Yeah, that is a really good point. And when I want to jump back into that short list you gave of the whys, and we'll go right to kind of a blurring one, and that's hiring.
Sure.
This I see this just crush businesses. Way overhired, way too
Sure.
many guys are not producing what they need to be 3x whatever you're paying them. Are they bringing that in? Right, they have to be producing more than you're paying them. And
Yeah.
I've seen it in, like, I mean, guys with 4 or 5 too many people. Okay, that's $250,000 that you're paying out, and then they're crying to me they don't have profit, they don't have money. You go, you got lots of profit. They're just taking it home.
Yeah.
Just your guys are taking it home. That's who's taking your profit. If you cut four
Sure.
guys out, that's $200,000 right there. And guess what? You get that profit on the next payroll cycle. You don't
It's
wait a year to
immediate,
get
right?
that.
It's
It's right
yeah, it
away.
is immediate.
It's,
It's a hard conversation to have for sure,
it
right?
is. It
Especially if
is.
you have good guys, and I hear this from my clients all the time. Finding good guys on the crew is hard. And if you have good guys on the crew, and I mean, obviously could be ladies too, sorry. But it's typically a male dominated field. But Yeah, staffing is really tricky. I think in a lot of industries right now, but particularly in the trades, it's really hard to find good guys. And if you know that that growth is happening and you're on the cusp of it, yeah, do you maybe float a guy for a while, knowing that you're not going to keep him busy because he's good and you're going to use him eventually? Those are all the conversations that you can have with your financial expert, and you can kind of start to break it down, and the situation is going to be different for everybody.
Yeah, it's very true, because there's like two sides of this coin, right? Let's take construction. Okay, yeah, you're a GC or maybe not GC. Maybe you're a GC, but you got the in-house crew that's building, right? And maybe you got a
Yeah,
lot of guys, maybe you have too many, and then the conversation comes up, well, why aren't you using subs? And then they go, well, I mean, you have four guys too many. Okay, like you really do. I'm just picking out a number here, but and if you could eliminate those, well, how do the first fear is how do I replace them? I really need them. I'm like, yeah, you tell yourself you really need them, but I'm telling you, necessity is the mother of invention, right? So you get rid of four guys, you'll figure it out. Because
sure.
because you
Yeah,
because if I dig a little deeper, I find out, well, if you had to, who would be the first four guys? You go, oh, I know right away. Okay, they're no good then. Okay, it's not going to be that hard of a thing if you know who they are.
yeah,
Okay, it's some dead weight. I get, yeah, I mean, every situation is different, but the reality is like sometimes you have to have those hard conversations. Find the good subs. Now, if you're a sub, you got the other problem. I need workers to because other people are doing my marketing, right?
yeah,
So I'm going and getting work, but like how much work can I handle? See, so there's two different sides of the coin there. At the same time, you got to stay busy. And when you're at the mercy of other people getting your work, right? That's the joy of being a sub. You don't have to market. You get to save that expense. You show up but you got to build those relationships and get them in. So I get that it can be complicated, but from the dollar standpoint,
yeah.
I think that's why it's important, right? You start to see in black and white the X's and the O's. You start to see this and what makes the most sense.
Yeah. Yeah, yeah, you just kind of start to break it down, right? I mean, we talked about it earlier, what's a P&L, right? Well, I mean, obviously revenue's on top, and then you got your various kind of direct expenses, cost of goods sold in there. So, materials, direct labor, typically some allocation of overhead in there as well. Obviously, subs would fall in that category as well. And then, that's, revenue minus those costs is your gross margin. And you should be able to determine, okay, is my gross margin within expectations of what it should be for the industry that I'm in? And if it's not, that's where you got to start digging deeper and, identify, what is the issue? Why is your margin not what it should be? If it's staffing related, it should be pretty easy to see that your direct labor is out of alignment with what it should be. Um,
And normally that may be the case, but the other problem, pricing.
oh, absolutely.
They do not price correctly. Okay. And we could do a whole show, an entire show on how, why, what's the reason, everything else be fine, correct pricing. And so many guys, and I don't know what it is, Cody. I think about it. I'm like, sometimes it's our own lack of what's the word? I don't want to say self-confidence. There's just this level of like, well, because we can do it, okay, because we can do a thing, we don't hold it in that high of value, right?
Yes.
If I'm a plumber and I had to hire a plumber, okay, that's a bad situation. Okay,
Yeah.
because you're charging how much? Man, I don't charge that much, and I'd be the other plumber going, that's your problem. I know what I'm buying.
Yeah. Yeah, we all kind of have this tendency to devalue our own
That's the word.
expertise. I see it in my field all the time. With accountants, it's like, oh well, I can give somebody an answer to this problem in 30 seconds. And it's like, well, you can't price it on the 30-second conversation you're going to have with that client. You need to price it on the decade of expertise
That's it.
that it took you to develop, the skills and the ability to provide that answer in 30 seconds, right? It's years and years of experience that gets you to the point of being able to do it that efficiently. And so you need to price more so on the value that your client is getting out of it and not necessarily the time that goes into it. I see that in my industry all the time. I can certainly see how it would trickle its way into the trades as well.
Well, yeah, because a lot of guys, they come from a hourly basis. They work for someone, get paid by the hour, so that determines someone else determine their value, right? And now they pick it up. They're running with the tools now. They're doing that kind of stuff, and they're making a little more.
Sure.
And they're working for someone. They get that, but what I notice is it takes that second, third year, sometimes a lot longer, till they go, I'm making a little more money, but there's no freedom here, Cody. Like
Hmm.
you're making a little more money. You got some trucks. You got whatever you got your tools. You got it's kind of cool, but you can't go on vacation. You're not living in the house you really want to live in. You're not doing a lot of things, and you're wondering, well, that's going to change. Well, how is that going to change? Right, and that's where guys like you come in, right?
Yeah.
Because you once you start really looking at the numbers, it'll make the decisions for you for the most part.
Yeah, no, I think so. I mean, there's the obvious, kind of financial advisory, right, that we can give in terms of, yeah, maybe you need to update your pricing and, add that extra 10%, to the bottom line, which is the thing that allows you to say no to a couple of jobs, right?
Right.
I think analyzing opportunity costs is a big deal here. Everything you say yes to, is some other thing that you're saying no to,
That's
right?
right.
Taking on that extra job means that, yeah, now you don't have the time to do that family trip or to take that additional time to go to the soccer game or whatever it might be, right? So there's certainly that benefit, but then I think there's just the things that people hold on to that they do themselves, that it's you need to at some point start to find the experts in that area and start to delegate things away. I did a sales call with a home builder out in Colorado earlier this week, and I asked him, how he's doing his accounting, and he said, "Well, I do everything myself."
Oh,
And I'm like, "Well, what? Why? Why are you doing everything yourself at this point?" And I mean, he's doing good revenue. I mean, 3 to 4 million a year, good sized business. He's got a crew of guys. Um, it's like for the cost of delegating that to somebody like me, the amount of time that's going to free him up to do whatever he wants. Could be more sales, could be taking on an extra job, could just be taking more time off to spend with the family. I don't know where your priorities lie. You got to determine that for yourself. But yeah, you get to a point where doing things yourself is it's a hazard, and you really need to start to again delegate those responsibilities to the experts. Buy
yeah,
your
I
time
think
back.
yeah, it's quality of living. I mean, it's not
Yes.
standard living, it's quality of living. Yeah, you want to make more, but you don't have to spend more.
Right.
Buy time. Get that. And I think what happens a lot too is what they don't realize is the freedom suck that is. All that time I do it myself. I mean, you get to a $2-3 million a year revenue level. It's like that. I guarantee you, and you would do this if you sat down with him and opened the books. There's profit leaking everywhere in his business. I mean, it's like it'll be multiple six figures. I see it all the time with two
Yeah.
and $3 million, multiple six figures of profit without increasing marketing spend, advertising, none of that. I'm talking straight up profit. You're just leaving on the table or at someone else's house, whatever that
Sure.
looks
Yeah.
like. So I always drive because I just sucked at this my first 20 years. I just kept making more money. I made lots of money,
Hmm.
and I always thought that's what business was. When business is everything else. Making money is easy. It's the number one easiest thing to do in business. People don't think that, but I mean, you can go sell a job today. You can get a check today. Okay. You can make money easily. It's all the other stuff. It's keeping it. That's the hard part.
Yeah.
Right.
Yeah.
Yeah.
Absolutely.
Yeah. So you mentioned it a little bit earlier, Cody, was tax planning, tax
Hmm.
strategy. We call it tax strategy, tax planning.
Yeah.
And you said October. What I had to learn over time is no, it's ongoing.
It is. It really is. No, yeah, you're absolutely right, Richard. It's um, a few months from now, the calendar is going to roll over to January 2026. That's when we need to start doing tax planning for 2026.
There you
It's
go.
January 1st. Yeah, I will say yes. There's a big part of it that happens at the end of the year when we have good
Mhm.
numbers, and we start to think through some action items that we can execute before the end of the year. But no, it is. It's truly an ongoing exercise. Um, there's a lot of elements of tax planning that may span years. And so it's not just an annual thing, right? I mean, a good example of that might be like entity structuring, right? we have to look at that from a very long-term perspective to make a good informed decision about what your ultimate entity structure might be. So I'll give you an example. A client that I was working with several years ago, they were fifth generation business. So they've been around for like 100 years. Started out as a C corporation because what other options did we have 100 years ago? I mean, I don't know the history of the tax code back to 100 years. I know it back, decades, but not 100 years ago. And we start to look at it and it's like, well, does this structure make sense for this business today? It was the only choice 100 years ago. What are we doing today? And ultimately it doesn't make sense for them to be structured as a C corporation anymore. And you can look at the annual tax savings associated with moving away from that structure for this business. But really the real value and the real, potential life-changing wealth comes from looking at the long term. And what if they sell this business 10, 15 years down the road? And we were able to change their structure today, without getting into the details of it, we modeled it out. I mean, we're talking millions of dollars of tax savings on the ultimate sale of that business by moving away from that structure today. And it was so great to be a part of that for like a family of relatively young business owners. I mean, everybody kind of in their 40s, knowing that they got the time now to increase the value of that company and whatever that ultimate sales price is, that we're going to be able to save them millions of dollars on that future sales price. It's great, because you might see somebody think, well, I'm going to sell my business, 2 years from now. I'm getting ready to retire, and it's like it's too late. Like we need that. We need that long-term outlook. We need all those additional years to really bring all of that value to you.
Yeah, I think Cody, you're hitting the nail on the head here, and we'll talk about business valuation because no one is thinking about the exit. I have a whole thing about exit strategy. I have a whole program, but I tell people the best time to do your exit strategy, to plan for it, is before you launch your business.
Yeah.
The second best time would be right now.
Today. Yeah.
Okay. Like those are the only two options. Okay. Because until you know where you're going to go, and it's as simple as how long, how much. How long you want to do this and how much you want to get out.
Yeah.
Because I guarantee you, whatever your number is right now, it doesn't matter. You have to have a plan, otherwise it's a fantasy.
Yeah. Stephen Covey says, and I'll probably butcher the quote. It's start with the end in mind or begin with the end in mind.
Yep, exactly.
And I mean, it's hard. I launched my business last year. I have an idea of where I want to take this business, right? But it's hard to look at, beyond a few years into the future, what anybody's business is going to be like as we're kind of experiencing this. I don't know. I'm not sure what the right term is, but with the kind of advent of AI and just like how that's going to change all facets of business moving forward, it's hard to think long term like that. But I think what everybody's got to do, they got to take a deep breath. They got to say, this is what we know today. The future is undetermined, but let's do the best we can with what we know today and develop a plan. And it's going to change. I mean, it's going to change over time. The entity structure that you put in place in day one, the tax plan that you put in place in day one, so much of it's out of your control. You got to have some sort of baseline to work off of, but we don't know if the tax law is going to change. We don't know how something like AI is going to affect, business moving forward in terms of, valuation and things like that. We don't know what other technologies don't even exist today that might, change things for our industry moving forward. I think we can say some things are certain. We're going to need toilets into the future. We're going to need, furnaces and air conditioners and things like that. So we're going to need people to maintain, people got to live somewhere. We need people to maintain those structures and build those structures. So, we know construction isn't going anywhere per se, but again, we don't know what things are going to change in the future. But at the same time, we got to have something. We can't do nothing.
Well, here's the thing, Cody, and I tell my clients this all the time. Along to your point here is AI, whatever. Okay, like I've had multiple AI experts. I mean, guys who invented this stuff. Okay, they won't give you a prediction past 6 months.
Sure. Yeah.
I'm heavy into stuff now. It changes on the daily.
Yeah.
Okay, so but it's not here's what I always encourage my durable trades guys. Call them durable trades because you're right, they're not going anywhere. I said, but here's the thing: the blue collar is going to be the new white collar.
Yeah.
You're going to be the new wealthy if you embrace this technology. And some will poo-poo it and say, "Oh well, I build houses." What I no, but you still don't know how to run a business. And
Yeah.
these tools will run that business. They'll do the work that you don't want to do and most people don't want to do. But if they can do that, what I want my clients to do is prepare to take ground. Okay.
Hmm.
Because if they can get that dialed in, I mean, I'm talking about down to answering the phones, the whole thing, because they're going to serve your customers better than the average person who had a bad day, has a bad life, blah, blah, blah. Right. And I'm not saying get rid of people. I'm saying the everyday repeatable tasks like that stuff you want to automate so that you're really ready to actually scale and take
Yeah.
ground because you're not trying to train a new team to do all this because you can go to a new location, but you can't take all your people, right? So you got to look at that from that standpoint. What does that actually look like then? Well, if we can get a huge part of our business automated, again, the real task things, dialed in with you, like you're doing those books, but they were able to give you a quality books. You know what I mean? That would kind of help, right?
Yeah.
It would make your
Oh
job
yeah.
easier. It would cost them a little
Absolutely.
less, right? Not a box of receipts. You know what I mean? So I'm just saying, like, you're right. All this stuff is the unknown, but the fact of the matter from an exit strategy is still pick a time and pick how
Yep.
much,
Yeah.
regardless, because you always there are no straight lines. You can't ride a bicycle in a straight line. You can't walk in a straight line. Nothing works like that. We're always bopping off, coming back, going off to the right, coming back to the center. That's life. That's business.
Yeah.
So that's just factored in, but you got to have the end goal, you know?
I agree. Yeah. Yeah. I'm with, yeah. Yeah, I agree 1,000%. I mean, it's, you just you gotta take that kind of deep breath and you gotta recognize that there's a lot of it that's out of your control, but you gotta have some sort of end in mind. It goes back to the Covey quote.
Well, I think, Cody, back to what you do, this again, I'm just driving this back to the numbers. Okay. It's a roadmap. It's a road. You want to know where you're going? Well, that tells you. Okay.
Yeah.
See what's dropping. Okay. Yeah, you got your gross margin, but what's your net? What are you really keeping? Like, okay, great. You're at 38% on the gross margin, but what's your real net? I have guys they're taking home 2% on the real net. Okay.
Yeah.
That's not fun.
No.
Okay. There's nothing. It looks like you're doing a multiple seven figure business and you're taking home 2%, 1.9%. Well, I'm like, this doesn't make any sense to me. That's a whole lot of work, a whole lot of management, a whole lot of aggravation, a whole lot of dealing with people and customers for like nothing. You can make that
Yeah.
at Home Depot,
For sure.
So
Yeah. Yeah. Well, I think, Richard, the way you kind of explain that, you think, like you said, a roadmap, right, was the term you
right.
used. Well, when you think about, something like a Google Maps or, how are you going to get somewhere, right? There's two data points you need for Google Maps to work. You need to know where you want to go, but you also need to know where you're at right now.
Yeah.
And that's, I think, where a lot of the accounting side of things come into play, right? You need that starting point. Where am I today in order to get to where I want to be next, right? And that's what I think the accounting, that's your starting point. That's your foundation. That's your basis.
Well, I think well, I mean, I know people don't do this much more, but old school map reading, you don't look at the map once.
Yeah.
Okay. You're checking the map all the time, right? We got to check the map. What do I go right here or left here? Do I get on this highway or that highway? Oh, okay. So otherwise you're going, you'll end up wherever and there, it'll
Yeah,
never be where you want to
absolutely.
go. So that's my point. I think, and the numbers are that's your map. I'm making more. I had a good year, a bad year. Hey, listen, for a lot of the trades guys, inclement weather, a super
Mm,
hot summer, that could boost them 500,000 to $1 million for the year. A really snowy, super cold winter, same thing, right? So man, they're praying for the bad weather. Okay, so
yeah.
but those kind of bumps, what are you going to do with that now? You had one year out of 5 or 7 or 8, that was like 90 degrees every day, 95, and everyone's air conditioner down, all this stuff, whatever the case. But now you have this influx, and I'm just kind of, scenario playing here. Huge influx. You made an additional 500 grand, and you're taking on that. Now what? You can't act like you're going to get that next year, but
Right.
you have the surplus. That's, again, you got to go back to your books. Look at this tax strategy. How do I keep most of this? I got a
Yeah.
lot more than I normally do. What am I going to do with this? And if you see that roll in, like say it's June, super hot, things are starting, you're like, man, then you're looking at forecast, you're like, okay, I might want to call Cody and say, Cody, listen, we got a pretty big uptick here. I don't know how long it's going to last, but we need to start thinking strategy
Yeah.
because
Yeah.
unaccounted for money, Parkinson's law, evaporates. Because it's easy to go have a really good time with the extra money.
Yeah. I mean, yeah, I can't tell you the number of times where I'm working with a client and we get to doing the tax return and we haven't done planning because they haven't made it a priority
Mhm.
and or they didn't have good numbers and so we didn't know that they were having that good of a year. And it's like, okay, well, this is how much you're going to owe, and it's like, oh shoot, I went out and bought a boat. I don't have
Right.
that cash anymore. I got a boat instead. And it's like, well, I mean, I guess the IRS could take your boat. They don't want that, but you know. So yeah, again, to me, it goes back to just staying in touch with your financial team, and I do think it's a team, right?
Mhm.
It's not just Cody the CPA. There's a lot of advice that I can give you, but you're probably going to have some form of wealth management, investment advisor, person involved. You're going to have an attorney. Once you start generating this level of wealth, you're going to have to start doing estate planning and things like that because it's not now just your money that you're concerned with. It's what happens to that money after you pass away, and those aren't fun conversations to have. But again, there's a whole tax planning element to that to ensure that um, whoever's receiving that money upon your passing, that they're set up, with a good tax outcome as well. So, yeah, there's so much that we can help you with if we just keep those lines of communication open. And this is something that, as a business owner, you make a priority. And not to shame anybody or anything like that, because I know it's, you're putting in a ton of hours running that business. But at some point, it's incumbent upon you to make this a priority for yourself and find the time to sit down and have those conversations.
Yeah, I think here's what I tell them. I go, listen, you don't have a lot of financial literacy. That's not your fault.
Yeah.
It's a rigged game.
Yeah.
You never taught in school. You used to
No.
get a little bit decades and decades and decades ago, almost before I was young. But I said, so everything's set up against you. It's all swipe your debit card. It's never even, you don't even know how to write a check anymore. So these kids, they couldn't even write a check, right? They don't,
Yeah.
there's no connection to money. It's all pretend. It's all pretend. It's just swipe. There's a beauty about cash is you see it coming and going. You touch it, you feel, you put it in your pocket, that kind of
There's
thing.
some
But
pain
there
when it
is,
goes.
you see it, you can count it, as it goes. But the swipe of the card. So I tell them, so as you've grown up, as you work for others, whatever, they tell me, like, I have 6 kids. I have to educate them on this stuff. I'm like, you've got to understand, like, there's a discipline involved, but you have to shorten the learning curve. You're in business now. You have to go to experts. It's just like a business coach or a football coach or a baseball coach, whatever. You have to go to people who know what the heck they're talking about to give you a real plan, hold you accountable to the plan. Okay. Because you have to have a place for your money to go. And if you want to get wealthy, I haven't heard anyone say they don't want to be wealthy.
Yeah.
Maybe one person, but he was never going to be wealthy. So, but the people, so yeah, everyone will say yes. Everyone's going to nod. I want to go. Okay. Well, it doesn't happen by magic. Okay. We have to plan it. Everything has to have a designated place for it to go. Loose money, just laying around, it just disappears. It evaporates. It is truly that Parkinson's law. And you've got to have a place for it to go. When you do that, you can watch assets increase. You can watch investments. Some investments get bigger, right? You're focused on doing the thing, which is good because you have to, right? You can focus on growing your business because you know the money part is handled. It's just not waiting to get to it when I slow down because that is a disaster. Been there.
Yeah. Well, and I guess, kind of thinking along those lines of, tax planning and to your point, you have this pile of cash at the end of the year, where to put it. I'll throw out what I think are good strategies for, contractors to consider. Retirement plan. What kind of retirement plan do you have in place within your business? So what you're doing is you're preserving that wealth, you're lowering your tax liability in the current year, and you're keeping that money, you're taking it from your left pocket and moving it to your right pocket because it's set up to your benefit in the future. What I think is super interesting about like the trades is there are some really creative opportunities if the dynamics are right for your business, where you can put that money. So most people are familiar with like a 401k plan as a retirement vehicle. There's this concept of a cash balance plan that is different from a 401k plan in that a 401k plan is a defined contribution plan. A cash balance plan is a defined benefit plan. It's more like an old school pension, that people would have got 40, 50, 60 years ago. If you're a union contractor, all your guys, are in the union, they're participating in the union's retirement plan. You as the owner may be able to drop your union card, set up this cash balance plan for yourself and any non-union employees. So maybe you have a couple office employees in there that, aren't in the union that have to participate. You could stash away upwards multiple six figures a year into this retirement plan. The bulk of those dollars are going to you as the business owner based on the calculations, years of service, compensation. I'm not an actuary. I don't really know how those calculations are done. But if you're a successful, highly profitable business owner, you can be putting away six figures a year for yourself into retirement versus a 401k plan where you're limited to, I don't even know the number offhand now, say it's $20,000, $24,000 a year. So you're talking about putting maybe 8 times that away for yourself. There's some really interesting opportunities within the trades.
Yeah, and that's compounding interest, man.
Yeah,
That's a big number. You start doing 6 figures a year, do that for 20 years.
absolutely.
Okay. You're going to be living large. Okay. At the end.
Yeah.
Okay? With money left over, right? To hand down and everything else. So it's just so important, Cody. And it was an odd thing for me and just being transparent. I'm out building these great things. I did not care about money. It wasn't a motivator for me. I made lots of it, but I didn't care. Not a good strategy. Okay, I'm just saying.
Yeah, it's interesting because then what was the motivator for you then?
Doing great things, just building great things, doing what other people couldn't do.
Okay.
Building something that people just go, that I've never seen anything like. That's amazing. Water features, right? So I'm building water features. I'm doing sculptures. I'm doing stuff that people couldn't do. Even guys who thought they could do it couldn't even come close. So I could charge what I wanted.
Yeah.
It was amazing. And I built incredible things for like 20 years. But that wasn't, but the money, it was all good, but I didn't care. I just wanted to do the next great thing.
Yeah.
That was my wheelhouse, man. That's where I lived. I had an ego issue. Okay.
I think in a lot of respects, that mentality lends itself to running a very successful business. Maybe when you're not focused on the money and you're just focused on doing good work, the rest of it kind of falls in place. But I think it kind of broaches like another subject that, like, if I could go back in time and, recommend something to myself earlier in my career, back in college, I would love to pair the accounting skill set that I developed in college and early in my career with more of like a psychology aspect, because the way that people view money and think about money is just so interesting to me. And there are a lot of times where I feel like in my role as the CPA, as the business advisor, to entrepreneurs, is that I almost feel like they're therapists, like they're financial therapists in some way, because everybody's got a different relationship to money, and kind of how you were brought up and your thoughts and approaches to money. It all influences those business decisions that you make, and where you're ultimately going to end up.
It's a fascinating topic here because you're right. It's a mindset, right? Money's a mindset thing. But what do you seek? So you're the guy. You're like kind of got to be. You're the advisor. You're a CPA. You're basically making sure everything's compliant, everything else, and doing all that. But do you ever have to tailor because you kind of figure out these money personalities? Like he or she should do this, but they're not gonna. So I got to find another
Yeah.
thing
Well,
that's going to
yeah.
still work, but that in their mind they can accept, even though the outcomes are the same. Do you ever run into that?
Oh, yeah. Absolutely. I mean, there are people that have a very short term mindset, and they really want to do everything they can do this year to drive down this year's tax liability. That is priority number one. And you can sit there and tell them, well, we're creating a future problem for ourselves here. You may look at somebody that's using the cash method of accounting for tax purposes, for example. So, in very simple terms, you're not paying tax on the income until you receive it. So, if you're a growing business and your receivables balance continues to grow, you're deferring that receivables balance to a future tax year. And I've seen some receivables balances into the tens of millions of dollars for some of the pretty larger businesses that I've worked with during my career. That's all a future tax liability at some point. That 10, $12 million of receivable, at some point, all the money comes in, and then you're stuck paying tax on that 10, $12 million in a future year. Whereas maybe we should be a little bit strategic with things. Maybe we could take some income into account every year. And especially if we're able to play with tax brackets and things like that and pay tax at a lower rate, by accelerating some level of income into the current year, rather than drive to zero, let's drive to an amount that allows us to pay tax at a lower bracket. Then we're not going to pay tax at the highest, 37% tax rate years into the future. But for some people, they need that dollar today, right? And are they wrong? I don't know if there's a right or wrong answer here. I think it really boils down to mindset and what makes sense. I suppose you could model it out, and tell them that they're wrong. But a dollar today is worth more than a dollar tomorrow. What can I do with that dollar today? It's there's a lot of decisions, and or I guess there's a lot of factors that go into these decisions. And everybody's a little bit different. So
And don't forget, people love to be told they're wrong.
that too. Yeah.
so,
Yeah.
so I get it. I mean, I'm not envious of your position, but I think the key is the multiple strategies, and there
Yeah.
is more than one way to do this stuff, and people really have to. Yeah, and like I said, you do have to kind of understand people, the mindset they're coming in with, because there's those people who just understand money is a tool. That's all it is to them. Okay. It's a tool to do things and do this, and I can
Yeah.
leverage this and make more money. It's a tool. It's not part of their security. It's not part of their identity and all that kind of, because some people, money's their identity. So that's a whole different animal. You
Yeah.
got to unpack, right? A whole different mindset and all that stuff. So it really kind of covers the gamut. And you're right. And some people they're savers, and then you got your spenders, and you got your investors, and you have all this stuff. We have to tailor different programs to fit all their needs, because you're not getting all the same people all the time. It's always going to vary, regardless if they're all in the same industry.
Sure.
I mean, people
Yeah.
are people.
Yeah, absolutely. I mean, there seems to be some commonalities with folks in the trades, but again,
Right.
no two people are the same. I think the things that I see, commonly are just very down to earth people that will admit that they aren't financial people.
They like
And
big trucks. That's what they all
sure.
want. We all want big trucks.
Yeah. But they're very appreciative of the financial advisors in their life, because they know that they're not money or numbers people. But yeah, you're absolutely right. I mean, you got the guys that their mindset is I'm here for a good time. I'm not here for a long time. And they're, they're the spenders, and they want, again, they don't want to pay taxes because they want to take that money and buy their boat, or buy their multiple vehicles and sports cars and whatnot. And then you have people that are a little more long-term thinkers, fiscally responsible, and you almost maybe to the opposite degree, where you need to encourage them they can't take it with them, live a little bit. So there's, it's a wide spectrum. And I think it just comes down to talking with everybody, and getting a feel for their personality, and what their priorities are, and laying out the different scenarios. And if you do it this way, well, this is the outcome. If you do it this way, this is the outcome. And you tell me what you want to do.
Yeah, I think what's important here, Cody, with anyone, whether they're going to work with you or the million other whatever financial guys, CPA guys, whatever, this is all based on a relationship.
Mm-hmm.
Okay, you have to be aligned with your accountant. Like you can't have someone who's like the polar opposite of you, because those relationships don't work. It's not like you're getting married, but I'm just saying, like, you got to have an alignment. You got to understand where each other's going, right? To have them take you there, because that relationship is you got to build the trust. I need trust in you. If I'm giving you the ability to tell me like what to do with my money, I know it's not that specific, but the point is, like, I am taking advice from you, I'm paying to take advice from you, right? So that trust, that relationship is so critically important, because I am going to come to you with stuff. I got a banner year. What am I going to do? It looks like it's going this way, looks like it's going the other way. Hey, we're going into recession, my man. I want to stay in business. Okay, let's work on strategy. We see it. I have manufacturers I'll talk to. They understand, look, we're down 30% on orders and everything else. They have to come up with a strategy, and they do it. They figure out another way to do it, and they make that up. And then that 30% comes back up, but they also built this wing to make up for it. Now they're booming. Right. So all of a sudden, like, because they could forecast, they are paying attention to the numbers, they knew what was going on. They put in contingencies to equal it out. And then the economy came back, and boom, they're up 30%. Okay. So it's really, but that's because they pay attention to the numbers. Okay. And what's actually going on the floor and that kind of thing.
Yeah. Well, yeah, adaptability, right?
Yeah.
I mean, I wouldn't necessarily say I have a set, kind of group of values for my firm, Builders Tax Group, just yet. We're still, working on that. But I think for me, two things that we've talked about today that I think are highly important: adaptability and intentionality. Being able to be flexible and navigate to changing environments, but intentionality, like always having what is most important in mind when you're making those decisions.
I think that's good, Cody. Now let's expand on the flexibility part. Okay.
Yeah.
Just a word of caution for people. Don't be like flipping every month. Okay. You got to get a plan and stick to it. Flexibility or pivots. Pivots are small.
Yeah.
Not left turns. Okay. So you got to understand, like, you have to have a level of confidence when it comes to investment. Okay. Or strategy. You gotta look out a little further down the road, what we're really going for. You're going to hit some bumps. It doesn't mean you jump ship. That's
absolutely
one of those, right? You see people like, and then every month they're changing, buy, sell, buy, sell, buy. And you're like, dude, you got to let it ride. Okay.
Totally. Yeah. I mean, I think there's, I don't want to say it. There's, I think as entrepreneurs, we sometimes chase shiny objects, right? Shiny object syndrome, I think. And yeah, you got to have a level of patience as well. It's easy to go after the shiny object. It's easy to have knee-jerk reactions to things, but yeah, and I think some of that, is where relying on the professional comes into play. We had a major tax bill passed earlier this summer, the one big beautiful bill act, right? Huge tax bill. The first thing that I did with my clients was I sent out a mass email. I said, just don't think about this at all right now. Just keep running your business. we're gonna digest this and we're gonna come up with recommendations for your business, but you don't need to do anything today, right? Nothing in that tax bill had to be executed on back in July. The bulk of it, is effective for 2025, and we're going to factor that into our tax planning here throughout the year. Some of it's not effective until next year, 2026. So, again, there's always something happening, that entrepreneurs need to be aware of, but it doesn't mean you have to act on it right away.
Yeah, that's important. I'll circle this back to exit strategy. I always tell my clients, listen, you have the exit strategy. Here's a reason why you want to do it early, right? Because it's what I call a business filter. It's your greatest business filter. You talk about shiny object syndrome. When you start getting successful, opportunity tends to show up. Okay, people bring it to you. They got the next great idea or whatever because you got money. Okay, and they want your money. Okay, so there's a simple response. Okay, man, that looks really cool. Tell you what, let me run it through my exit strategy and I'll get back to you. Hey, if it gets me closer and faster to my exit, I'm in. If it detracts from it, it's a hard no. Really simple. It's a way to keep you disciplined in those kind of things because we can get pulled off track really fast because we're entrepreneurs. Oh, I can do another business. Really, this one isn't even perfected.
Yeah.
Like dude, you're in year 3. What do you mean you can start another business? Nothing's even systemized here. You don't have SOPs. You're not even you just broke 7 figures on revenue. Like, come on now. I got to reel people back. Like
Yeah.
let's stay focused. Let's get this thing humming. Let's get into some real numbers. Let's delegate. Let's automate. Let's eliminate, and then have that run. Then we can talk about the next thing.
Yeah. Well, you see it behind me on the bookshelf,
Mhm.
Traction.
Yeah.
And this is not a sales pitch for Traction. There's other, philosophies out there, Pinnacle and other tools out there. But I think at the crux of a lot of these tools is, having your goals. With Traction, there's a 10-year goal. There's like a 3-year goal, and then there's kind of your 1-year goals. And then you break down, your priorities into rocks, which you execute on, kind of 90-day increments. But all of those rocks need to be feeding to your 1-year goal, which feeds into your 3-year goal, which feeds into your 10-year goal. So if you have that, to your point, your exit strategy or your end in mind, you can just kind of start to work backwards from there. And it really gives you, an idea for whether or not you should be, chasing some of those shiny objects. Do they feed into the long-term strategy or not?
Yeah, it's just and a lot of people do things a lot of different ways, and that's okay. That's the world, and there's no one way to run a business ever. Okay, but I think some of these general, we'll call them wireframes.
Yeah.
Okay, like you got to understand, like there's an operating system. Okay, like in business, there's things you have to do. Okay, now there's a couple of different ways to do them, obviously, but you got to figure out what works for you. Because like we talked about throughout this thing, everyone's got their different money mindset.
Mm-hmm.
Everyone's got their different desires, their different wants and needs, their different strategy for the business overall. Once hey, I started the business just for an income generator. There's stuff you can start literally it just makes you money, and it doesn't need you. Those are great. Those are fun.
Yeah.
Right? I want one of those. I call it my ATM. And you get that, but there's other people aren't made up for that, right? That makeup doesn't work for them. They're a hands-on person. They need to run this. They can go big, but they're going to be at the wheel. Okay. So we always have to keep that in mind, and you got to kind of learn that about yourself. I think when it comes down to this money aspect and the
Mm-hmm.
whole thing is really understand where you are in that diagram, if you will. Right? Are you the spender? Are you the saver? Are you the investor? Are you the, just fearful it's all in my mattress kind of thing, mason jars in the yard? I don't know.
Mm-hmm.
Well, whatever that is, what does that look like? You just spend everything because you think if you pay for everything cash, you're being brilliant. I'm raising my hand. I thought I was, and I was a complete idiot. So I was dropping tens of thousands on stuff. And then guess what happens? You don't have any money left. But you got to
So it
shine.
wasn't painful enough for you, to hand over the cash in that situation.
Right. Yeah, to me, it was like, I see this great machine. It's only 52,000. I got 52,000. I just go buy it. And that's it. And I'm being smart because I'm debt
Yeah.
free. Ask Dave Ramsey or someone, but I'm like, but I could have rented that for about 4,500 for the whole season. and then
Mm-hmm.
given it back and got another one next year and invested $45,000. Hmm. Who made a better choice?
Yeah.
So it's like,
Yeah.
it sounds good on the front when you're running and gunning, because you got it. But man, that money needs to be making more money. I get it. I bought an asset, a
Mm-hmm.
depreciating asset, but an asset I could use, but I already had one. That's my second asset.
Well,
But
I
I
mean,
drive one
Richard,
at a time.
you are like addressing every year in tax planning conversation I have with the construction business owner, because again, they're thinking about the current year tax liability, and their first inclination is, should I go buy a new truck? Should I go buy a new piece of heavy equipment? Because I know I'm going to get to write that off for taxes. That's going to lower my tax liability. And my first question is like, well, do you need it? Like, do you
Yeah.
need that particular asset? If you told me, well, yeah, in January, I'm going to need that new piece of equipment because we're getting this job up and running, or we have a similar piece of equipment, but it's at the end of its life, whatever it is. I'm going to tell you, okay, yeah, well then let's try to buy it before the end of the year so we can get the tax deduction, sure. But if you don't need it, you spend 100 grand on fixed assets at the end of the year. That's going to save you, depending on the state that you're in, your tax bracket. I mean, that's going to save you maybe 25 to $40,000 in taxes if you spend 100 grand on equipment. But you still spend 100 grand on equipment,
Yeah.
right?
Yeah.
When you could have taken that 100 grand and done something else with it.
Yeah. I'm so glad you addressed this because it's always one of my pet peeves. You're in, and there's a lot of accountants that don't take your point of view. You need to spend money. You
Yeah,
need to buy. You're like, hold on now. What do you mean? Like, you're making too much money. I go, well, that I've never considered that a negative, but you do. Okay, so like you're not my guy. Okay,
yeah.
my guy's gonna go. You're making a lot of money. Let's do something with it.
It's the
Let's
best problem to have. It is. I
exactly.
mean, yeah. Again, I hear people that are paying taxes is painful for them. Again, there's a mindset around it where it's
Mhm.
painful, and it's like, if you want me to zero out your tax liability, we'll take your taxable income. Let's say you got $1 million of taxable income. You pay me $1 million in accounting fees. I just wiped out your tax liability.
Boom.
I'll take the $1 million and pay the tax on it, right?
Yeah, good to go. What you are
Hey,
incredibly
just
generous.
shift it
Yeah.
over to me. I'm happy to absorb your tax liability for you, right? So, I don't think anybody should pay anything more than they're legally obligated to pay. I mean, we're gonna go through it, and we're gonna be aggressive, and we're gonna look for every opportunity that's available to us in the law. But we have to take a step back at the same time and just recognize that if we're running successful businesses, like, we can employ a lot of strategies to reduce, we can employ strategies to kick the can into the future, but sooner or later, if you're making money, you're gonna have to pay tax on it. And I think just you got to shift that mindset. And again, work with somebody that's going to do everything they can to minimize that for you legally, but also accept that it's a fact of just operating in this country.
Yeah, I think that's the great takeaway for kind of the whole show here as we wrap things up, Cody. It's you need someone like you, okay, who actually has your best interest as a business owner at heart,
Mm-hmm.
not just checking boxes. There's plenty of those out there.
Yeah.
They're going to check the box again. They're compliance only. It's all they care about. They did this. I checked this box. And this great. Therefore, there's a different market for them. You're a business owner.
Mm-hmm.
You're a mover and a shaker. You're growing. You got a lot of pains. You got a lot of pivots, stuff like that. You need someone who can adapt with you, is ready to go to solve those problems. You know what I mean? Create that strategy on an ongoing basis. If your accountant wants to see you once or twice a year, he's not your accountant.
Yeah.
Okay, like you don't want that person in your life. Okay, we talked earlier about relationship. Man, this is my money. This is my business. I need someone who's like come alongside me here. Like, I want them to do well because I'm paying you. I'm going to pay
Mm-hmm.
you well to take care of me. Right? That's the mindset. We're both winning. Let's do that because
Yeah.
we're taking care of each other. I'm sending you clients so you can make more. Right? And that's really that's how I want to kind of, because this can be a weird topic. Right? It can be hard for people, again, all money mindsets and stuff like that. But I just want people to know through my own like bad experiences and my good experiences, like, you need experts like you, Cody, in their corner. Okay. Corner guys are it. I'm a boxer. Okay. My corner guy has won my fights. Okay. One adjustment, one little adjustment. Man, just come up with that hook to the body, man. You'll stop him.
Mm.
Oh, okay. Boom, boom. Down he goes. Okay. Love it. One thing, because they got the other eyes. They got the outside eyes. They're seeing stuff you can't see because you're in it. So that's my final thing. What is your final words for our audience?
Oh man. I think I'll go back to, something that I said earlier is find the time, make it a priority, find the right person to Richard's point, find the person that's going to walk alongside you and be there with you. And, I'll just kind of, throw out some things that I do that I think are a little unique that maybe other CPAs don't do. All of my clients in my signature, in my email, have a link to my calendar. They can put a call on with me any point in time, book right directly to my calendar, no charge, unless it requires additional work beyond, just that call. But, find somebody that, it doesn't have to be me, but find somebody that is going to be there for you. It's in your best interest, to make this a priority for yourself and to, again, approach it as a, not a once a year thing, that this is something you need to be doing throughout the year, because it's in your best interest. At the end of the day, we want everybody to take home as much money as possible. Everybody here is working hard. And a lot of that starts with, having good numbers and minimizing your tax liability.
I love it. I love it, Cody. How can people get in touch with you? Follow you. You know the drill.
Oh yeah, pretty active on LinkedIn. Feel free to add me on LinkedIn. Builderstaxgroup.com is the website. We'll do free, assessments for potential clients. There's a button on every single page. Schedule a call. We'll do a free hour-long call to just kind of talk through, where you're at. As part of that call, if you're willing to grant us access to your tax returns, we'll review them in advance, and we'll give you some recommendations and strategies. And if you walk away and give those strategies to another CPA, well, that's okay. Obviously, we want to work with everybody, but we're in the business of giving out free knowledge, and that's why I'm doing things like coming on these podcasts and just trying to give out free recommendations. And yeah,
That's awesome. That is awesome. And take them up on it. I always say this because of a lot of my guests. Like it's like reading a book. Read a book, put it on the shelf. If you don't apply it, it's useless knowledge, no matter how good the book was, right? So experts are like that too. If you get an opportunity to reach out and talk to them, it's worth investing that time. Because I'll tell you, if you're not willing to invest that time, you're not going to invest anything else.
Yeah.
Okay. You have to have an appreciation for investment, and that includes your time, which is probably the most valuable thing you've got, especially in this industry, right? So with all that being said, Cody, it's been just awesome having you on. Thanks for sharing all your knowledge and everything else. I love what you're doing, man, and just much success to you in the future here as you launch this. It's really good to see, and I'm glad you're helping guys in the trades and service. The home services industry is great to see it. And for everybody else, we'll see you on the next STS podcast. Thanks for joining me on the Sharpen the Spear podcast. If you're a manufacturing executive and you're serious about unlocking hidden profit, improving frontline leadership, and taking control of your floor, go to grit2lead.com right now. Run the free Sharpened Impact Simulator and discover your biggest opportunities are hiding. Don't leave millions on the table. Sharpen your spear, lead from the front, and win the floor. Until next time, stay sharp.